All right, good morning, everybody. Welcome to Early Morning Crypto Talk. Bitcoin Brandon here. Get ready for Thanksgiving. Let's see who do we have on the line. Jamar Lopes, Tracy Kubish, ED, Tony Pinkston, Peter Vargas, Damon Floyd, Brenda Abram, Bethany Gibbs from Seattle. Please make sure you guys are hitting that thumbs up button if you're listening. You can type in the chat box where you are listening in from. Robert Wood, Baltimore. Justice LeBron, Puerto Rico. As a disclaimer, I am not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed decision on which direction you want to move into. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money that you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? Find a vehicle, make a decision, take action, and remain focused. Do not get distracted. Now, there are many things out there that can distract you in this space. Remember, you have limited resources. Now, following these rules is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. All right, so let me get screen share up and going. All right, so first up, and this is interesting. First, we're going to actually look at the market. Let's see what the market is telling us today. And what I'm going to cover today is predictable. Whenever the market goes through a major correction, all the critics come out running that the sky is falling. All is lost. All is over. So what is the market telling us today? And it is important that you're able to read the market. It's like a book. It tells you a story. It's not just numbers and letters. And that's how I used to think it was when I saw it for the first time. I'm like, what is this? So total market cap is 147 billion. It is now below 150 billion. So it has lost about 4 billion since the last time I did a crypto talk. Bitcoin dominance is still at 53.3%, which meant that loss came from the altcoin. But the slowdowns happened over the last 24 hours. It seems the bottom has hit. We are no longer in double-digit losses, and Tether is back in the green. But that can be a little misleading, though, looking at this. I got to see what the other USD coins, because this is telling me that people are still pulling money out, moving into Tether. But I think Tether's just recovering from a huge loss. It was down to 96 cents. Now it's back up to 98 cents. So this isn't reflective. You got to look at the other stable coins. Dash is back in the green. Let's look at the best performers last 24 hours. Any of the major coins. Factum, 19%. Mixum. Mixin, let's see. Dash, yeah, 3%. Maker. Tether's getting itself back up there. Let's look at the worst performers. Mithril. So only one coin is still in double-digit red. So the entire market cap seems to have flattened out, bottomed out. Tezos, Steam, Olo, Zcash, Komodo, PundiX. Electronium's got back above 1 penny. Ethereum Classic. Ethereum is down to $134 a coin. I'm gonna look at the top 10 again. So Ripple still holds the number 2 spot. It overtook from Ethereum, still sitting at 43 cents. Pretty healthy for Ripple. Bitcoin Cash is all the way down to 233. That's about where it was after it first came and hit the market, and it hit at 500 and dropped down to 232. Stellar still 19 cents. EOS, Litecoin, Cardano, Monero, Dash. You know, the most popular coin in Venezuela is Dash, not Bitcoin. Go figure. All right. So this story is telling me the market has hit the bottom and is flattened out, stabled out. Whether it stays here, we don't know. We'll see. What really you need to see happen is this number here rise. More money being put into the market. Over 70 billion has been pulled out in the last week and a half. 70 billion. Now, when you lose that much in the market, the critics are going to come out of everywhere. So let's go over what they're saying. First up, Bloomberg. Not surprisingly. See what Bloomberg has to say. Bitcoin rigging. Criminal probe focused on tie to Tether. I've always been skeptical of this because I always see people that's writing articles that have never traded before and they have no idea how Tether is used strategically. But let's see what they have to say. As Bitcoin plunges, the U.S. Justice Department is investigating whether last year's epic rally was fueled in part by manipulation, with traders driving it up with Tether, a popular but controversial digital token. Here's my only problem with that. My only problem is the numbers. If you look at Tether, we're talking about 1.8 billion. There's only 1.8 billion. When I look at Bitcoin, 17 million coins, $4,500. Last year was up to almost $19,500. Total market cap is 78 billion. There's not enough volume here to adequately mess with Bitcoin. Heck, even BitConnect had more volume than Tether did. BitConnect got over the 2.5 billion and was ranked number 5 coin. So just by the sheer volume alone, I'm skeptical over claims that Tether was able to effectively price manipulate. Unless they're talking about whales making big moves and then everybody else following suit out of fear. And hold on, this is Wednesday, and Wednesday I got my gardener here. You might hear some background noise. So I want to hear their proof. What are they talking about? While federal prosecutors opened a broad criminal probe into cryptocurrencies months ago, they've recently homed in on suspicions that a tangled web involving Bitcoin, Tether, and crypto exchange Bitfinex might have been used to illegally move prices, said 3 people familiar with the matter. Okay. Bitfinex has the same management team as Tether, a Hong Kong-based company that created the namesake cryptocurrency. When new coins come to market, they're mostly released on Bitfinex. Some traders, as well as academics, have alleged that these tethers are used to buy Bitcoin at crucial moments when the value of the more ubiquitous digital token dips. J.L. van der Velde, the chief executive officer of Tether Ltd. and Bitfinex, has previously rejected such claims. Bitfinex's general counsel, as well as outside lawyers for the exchange and Tether Ltd., didn't respond to phone calls and emails seeking comment. The Justice Department's probe adds to an existing inquiry into possible misconduct. Both Tether Ltd. and Bitfinex received subpoenas last year from the U.S. Commodity Futures Trading Commission, Bloomberg reported in January. The Justice Department and CFTC are coordinating their examinations, the people said. It couldn't be determined whether government officials are solely investigating activity that occurred on Bitfinex or if exchange executives are suspected of illegal behavior. Neither the Justice Department nor the CFTC has accused anyone of wrongdoing. That's important right there. And authorities may ultimately conclude that nothing illicit occurred. That's interesting as well. Spokeswoman for the Justice Department and CFTC declined to comment. Cryptocurrencies captured investors' attention in 2017, with Bitcoin surging to a record high of about 20,000 last December. But it's been a difficult story this year, as many on Wall Street have concluded the market was a fad. Another factor in Bitcoin falling below 42.25 Tuesday, scrutiny by government officials who've repeatedly warned that the mostly unregulated industry is likely rife with fraud. What government officials? See, if you're gonna call or make a statement like that, call them out. What government officials? Because I've got quotes from the head of the CFTC, the head of the SEC, all of the congressmen who held a hearing on this just 3 months ago, saying the opposite. So this is why education is important. You just can't take what somebody writes because it's from Bloomberg as factual. He just threw out there, scrutiny by government officials who've repeatedly warned that mostly unregulated industry is likely rife with fraud. Who said that? A focus of the Justice Department's investigation is whether the dramatic rise of digital tokens in recent years was purely driven by actual demand or was partially fanned on by market tricks. Along with the CFTC, prosecutors have been looking into a number of trading strategies, including spoofing, the illegal practice of flooding the market with fake orders to trick other traders into buying or selling. In other words, that's called pump and dump. While not as well known as Bitcoin, Tether is widely used by traders to bet on price moves for other cryptocurrencies. That's because the token is more stable than other digital coins, but remains outside the traditional banking system, making it relatively easy to transfer between different crypto exchanges. And why is that wrong? People are taking their risk by doing that. And Tether is not a cryptocurrency. It's a stable coin and is not the only one. Tether's stability and its name comes from the fact that its value is supposed to be tethered to the US dollar. Tether Ltd even says that for each digital coin issued, it has $1 in the bank, and they prove that to be correct. Some investors have questioned that claim. One reason the CFTC subpoenaed the company was to seek proof that tokens are backed by a reserve of US dollars, Bloomberg reported in June. Among the issues the Justice Department is examining is how Tether Ltd creates new coins and why they enter the market predominantly through Bitfinex, the people said. So what? The other stable coins are entering through other exchanges. Even Uphold has its own version of Tether. The probe follows allegations made in a June paper by University of Texas professor John Griffin and co-author Eamon Shems, who I still question if they have ever done any trading in crypto in their life. Griffin and Shems wrote that trading in Tether shows a pattern of underpinning and manipulating Bitcoin. No, it doesn't. Okay, let me say this right now, because I saw this even at the Crypto Invest Summit. People on stage still don't freaking understand how things work. Traders have figured out that stablecoin can be used like gold. If you're in the stock market and you start to see a pattern that the market's about to go into a recession or a bear, and you don't want to lose your value, you don't want to lose your wealth, it's not that people sell off all their stocks. What they do is they move their money into either precious metals, gold, silver, or real estate, but mostly in the stock market is going down, so is property, so they don't do that. So they might buy art in gold. Why? Because the value stays the same regardless of what the market is doing. So if you've got $50 million in the stock market and you move $50 million into gold or art, and the stock market drops down to 40 million, guess what? You didn't lose $10 million worth of value. You now have it sitting in another resource holding value. You still got $50 million worth of value. But then after it drops, you now take your 50 million out of art or gold and buy back into the stock market at the $40 million level. You now have more stock, and then as the stock goes up, you just made money on that move there because you protected the value. See, in crypto, what we have realized is if I've got 10 Bitcoin and I see the market is trending downward and I don't know where the bottom's going to be, and it may drop 20 or 30%, I move my Bitcoin into Tether. I hold my 10 Bitcoin value, even though the Bitcoin market drops by 20%. Then you know what I do? I take out a Tether and buy back into Bitcoin when I believe it's at the bottom. I now have more Bitcoin than I had when I moved it into Tether. I still keep the same value I had before I made the move. And then Bitcoin goes back up. Now I just made a profit. I have more Bitcoin than I did before I made the move. And I didn't have to sell my Bitcoin. Well, technically you are by moving into the Tether, but it's not going into your bank account. It's a stable coin. That's why it's called that. Now, if you have big whales doing this, what ends up happening is the uneducated folk see a whale making a move, moving 200, 300, 400 Bitcoin into Tether. Then it starts a panic because they're like, fear, the whale knows something's about to happen. They don't want to lose their value, their money. So everybody else follows suit. and also sells or moves into tether. It's reaction. That doesn't mean it's illegal because a whale decided to save their value on the market. The market just responded to what they did. It's not their fault. You guys understand the difference here? I mean, I could say this till I'm blue in the face. These clowns still can't figure it out. All right, they claim that Tether was used to buy Bitcoin at pivotal periods and that about half of Bitcoin's 1,400% gain last year was attributable to such transactions. Griffin briefed the CFTC on his findings earlier this year, according to two people with direct knowledge of the matter. Again, this guy Griffin, what he's saying is correct. What he is not understanding is intent. He doesn't get it. He's just looking at numbers. You can't just look at numbers. You got to look at people. You got to look at psychology of people, how they interact with each other, why they do certain things, what emotions is involved. One guy sells that has more coins than everybody else. What do you think's going to happen? Everybody else is going to follow suit, and vice versa. Griffin declined to comment on whether he's been contacted by government officials. After Griffin and Shams published their paper, Vanderbilt, the Tether Ltd. And Bitfinex CEO, disputed its findings. I dispute the findings too. He said in a statement that Tether issuances cannot be used to prop up the price of Bitcoin or any other coin token on Bitfinex. And they're right. They're right. These guys just don't know how the market works. That's why when you're educated, you're able to tell the BS and stuff like this. All right, next article up I want to look at. This one. As Bitcoin nosedives, regulators said to be investigating whether it was propped up illegally. And notice, this is by CNBC. And you know what I've learned? It is not even I learned, it's a fact. That whatever CNBC says about crypto, if you do the opposite of what they say, you will be right 95% of the time. If you do the opposite of what CNBC says, you will be in profit 95% of the time. That is a fact. But they're quick to want to pick up on anything negative in the space. So let's see what they're going to jump on Tether again as well. The U.S. Justice Department is reportedly looking into whether traders use another cryptocurrency called Tether. And right there, Tether is not a cryptocurrency. So they already got it wrong in the first sentence. To bid up Bitcoin prices during its 1,300% rally last year. And that's false as well. Bitcoin is almost 10 years old. This has happened before. Only now they're blaming Tether for it. Federal prosecutors launched a broader criminal probe into cryptocurrencies earlier this year, but now suspect that traders on crypto exchange Bitfinex may have been moving prices illegally. Bitfinex is one exchange. They don't control all of them around the world. That's in Asia. We don't even trade on Bitfinex here. We use Poloniex, Bittrex, and Binance in America. The news comes amidst Bitcoin's 16% price drop on Tuesday. As Bitcoin continued its downward slide Tuesday, U.S. regulators are reportedly looking into whether its record-breaking rally last year was a result of market manipulation. Now, here's what they need to be looking at. The downturn is a result of market manipulation, not the rally. The sell-off is a result of market manipulation. They haven't figured that out yet. Tether and Bitfinex did not immediately respond to CNBC's comments. Federal prosecutors launched a criminal probe into the cryptocurrencies earlier this year, but they now suspect that traders on crypto exchange Bitfinex might have been using Tether to coordinate Bitcoin's price moves illegally. Is coordinating taking place? Yes. Yes, it is. Like I said, I believe the market is being manipulated and purposely being held down. These clowns want to see, oh, was there market manipulation that it rose? They're looking at the wrong thing. Let's see, there's nothing. The University of Texas finance professor John Griffin, who has a 10-year track record of spotting financial fraud. Really? The stock market also went down this week. I don't see him running his mouth about that. It's not like just crypto went down. Everything went down. So John Griffin and graduate student Eamon Shams published a study in June that said at least half of the group in Bitcoin was due to coordinated price manipulation. See, they're looking at it the wrong way. He's looking at the jump in Bitcoin. I'm looking at the dump of Bitcoin. That is price manipulation. All right, enough of that one. Oh, is that crypto civil war? Yeah, that's between Bitcoin Cash. And here we go from Forbes. So we've got Bloomberg, CNBC, and Forbes. All got something negative to say. The great cryptocurrency scam. Really, Forbes? What were you calling it just a couple months ago? The greatest thing to hit humanity? All right, this is an opinion piece, I think, by Jay Adkisson. When I first wrote about the great Bitcoin scam in December of 2017, so you're back. You've been waiting for this, huh? Bitcoin was trading at $15,433 after falling from its all-time high of $19,783 a few days earlier. As I write this article, Bitcoin is now trading at $4,359. Very simply, Bitcoin is in deep trouble. Really? Is it? There are investigations about price manipulation, and the use of Bitcoin for payments is down 80% according to Reuters. Really? I'm going to tear him apart in a second. Then he's got this big bubble. Really? You're pulling this one out again? Have you guys ever seen a bubble pop and then reinflate itself over and over and over and over and over again? As poorly as Bitcoin has done in 2018, Bitcoin is the best of assorted lots. The website deadcoins.com humorously lists hundreds of defunct cryptocurrencies and related investments that were either outright scams or just really bad ideas, many of which attracted untold billions from investors worldwide who are now that much less wealthy. Whatever else one can say that cryptocurrency has accomplished, it has been one of the greatest destroyers of wealth in the financial. Wait. Oh man, they allowed this to be printed. Let me read this a little slower. I'm cracking up here. He says that cryptocurrency is the greatest destroyer of wealth in the financial history of mankind. Take, for example, BitConnect, which was pitched by this guy to enthusiastic investors, and at the end of 2018 was worth $450. It is now worth 6 cents, assuming you can find a buyer. Hold up. Hold up. Wait, I want to see who's he talking about here. Oh, Carlos. So we're going to bring back out Carlos, huh? Hold up. This again is where financial literacy comes into play. I can list 10 or more events in human history that have been far, 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 far greater than anything crypto. This is a flat out lie. I gotta read that again. One of the greatest destroyers of wealth. What was the freaking Great Depression in the 20s? What was the greatest recession in American history since the Great Depression in 2008? What was the savings and loan crisis of the 80s under Ronald Reagan? What was the oil crisis under Jimmy Carter in 76, 77? What about the collapse of the Roman Empire, the collapse of the British Empire? What is this clown talking about? The crypto market has, at most, was a little over $900 billion. The U.S. economy is in $21 trillion in debt. J.P. Morgan Chase does $6 trillion a day in transactions by itself. Just 3 months ago, a bank out in Europe was found of doing over $280 billion of wire fraud for one branch. That is more than the entire crypto market cap combined. And that was just one branch. And this fool is going to say crypto is the greatest destroyer of wealth in the history of mankind? I don't even know if I want to keep reading this nonsense. But the average person who has no education on finances is like a seal. Yeah, he's right. Are you kidding me? Let's look at the history of Bitcoin just again. Bitcoin price right now is $4,459. Do you know that it has never been this high in all of 8 years of Bitcoin? Up until the 9th year, it got higher than that. Look at the price for the past 8 years. Let's go up to, when was the last time it hit 4,000 for the first time? About July, August of 2017, the first time it crossed $4,000, which meant since 2009 all the way to 2017, Bitcoin was not even near $4,000, yet still here. And this fool was talking about it being a bubble back when it was $100, $600, $200, $300. Robert Will was like, watch the blood pressure. I mean, I get heated on this. You are going to sit here and flat out lie to everybody. Either this only shows me two things. Number one, either you are purposely lying to everybody, or number two, you are hopefully ignorant, a dumbass, and has no business writing for Forbes.com. And your example is BitConnect, whose value only got to 2.5 billion. How many Fortune 500 companies are there out there that collapsed, that had a value of more than $2.5 billion? Let's just look at the bubble of the .com era. How many companies collapsed during the heyday or the beginnings of the internet? But what survived? Amazon, which has the world's richest man. This guy is flat out misleading. He's lying. Let me continue to see if there's any more of this tomfoolery. Who's the article of this again? Jay Atkinson. I cover wealth preservation and its legal permutations. You need to be fired. You have no idea what you're talking about. All right, let me continue. Don't get me on a panel with clowns like this. I have no problem calling them out. Another thought just hit my head. I wonder if he is secretly invested in this, part of the manipulation crowd, because in their eyes, the wrong people are getting rich right now. And by spreading fear and FUD like this, it causes the average dumb citizen, and I don't mean dumb in a negative way, meaning dumb that they're not educated in the crypto space, to sell all their stuff. While the rich and wealthy hoard it all. What is his intent here? I'm curious. Anyways, nonetheless, hardly a day goes by that somebody doesn't ask me about investing in cryptocurrency because their financial advisor told them that they need some exposure to cryptocurrencies. My response is always the same. They need to find another financial advisor unless the plan was to go short on Bitcoin. You need to be fired. Remember what I said. When mainstream starts saying anything about crypto, do the opposite. Note that cryptocurrency is different than its underlying technology. Okay, now here we go. He's part of this crowd that separate crypto from the blockchain. So here we go. Watch what he's about to say. Note that cryptocurrency is different than its underlying technology known as blockchain, which does have substantial independent value and is not tied to cryptocurrency uses. False. Blockchain good, crypto bad. False. He has an agenda here. He's on the bank side here. He doesn't understand how this works. Cryptocurrency is a reward for creating the blockchain, you fool. See, unlike fiat currency, cryptocurrency is not just made up out of thin air. When the government wants to make more money, they just print it. That's it. They just print more money. You can't just print more Bitcoin. You actually have to have a proof of work. You need to get some equipment. You need to have that equipment programmed. You need to plug that equipment into an electricity socket. It has to have power enough of equipment to solve a mathematical problem. It has to build the blockchain. The miners are building the blockchain. And what is going to incentivize miners to do so? They're not working for free. The Bitcoin and cryptos is a reward for the building of the blockchain, which is meant to be decentralized. So when you hear a clown like this say, blockchain good, crypto bad, in other words, what he wants to happen, he wants the government to create their own blockchain technology and have it backed by a coin controlled by the government. That's not a cryptocurrency. That is a digital currency. That's what he's saying here. Crypto means autonomous, means decentralized. No government controls it. No bank controls it. No company controls it. You do. That's not good for society in the current form for government control. So his whole goal is we got to separate somehow this technology away from crypto. And the only way you do that is if you take away miners and you pre-mine all your coins. And you create the blockchain yourself without miners. That defeats the entire purpose of the whole movement. I hope I'm making sense here. You can see, I can read this article and I see right through what he's doing here and what he's saying and what team he's playing for. I bet in long term he'd back Ripple. Let me continue. According to retired investment advisor and cryptocurrency watcher Charles Padua, it is hard to imagine cryptocurrency being a suitable investment for all but those who are sufficiently wealthy that they can burn wads of cash off a bridge and not be distressed by it. Really? Really? That is your quote? See, again, when they say something, you do the opposite. Here's the real fact. Cryptocurrency represents the greatest economic shift in wealth in the history of mankind for the most amount of people. Why? Because there is no barrier of entry. You don't need to have a brokerage account. You don't need to have been born in the right family, speak the right language, have the right skin color, be the right gender, know the right people, have the right connections, be the right political party. None of that matters. All you need is to have a cell phone, access to the internet, and $5 to your name. Where else in the stock market could I flip $30 into six figures in 4 months? Legitimately. It doesn't happen. So by this fool saying, oh, you need to have money to play in the crypto market, he's lying to you. You need to have money to play in the stock market, not the crypto market. And you must have wads of cash to burn off a bridge. Yeah, you need that in the stock market. And even then, people start jumping out of windows and jumping in front of trains when things go bad. Education is the greatest gift you can give yourself as you're going through this journey. When people and friends you know throw an article like this up in front of you as proof, I told you this Bitcoin thing was a scam. If you're educated, you can read right through it. But let me continue here. The fact is that cryptocurrency is starting to make that transition from a bad financial idea to an outright scam. Really? It's worth over $4,000 a coin. That's the highest it's been. It's all of 9 years combined, except for 6 months in 2017. Actually, 3 or 4 months. Although cryptocurrency has at best a dubious future, there are still companies out there seeking venture capital from investors to take advantage of cryptocurrency and which promise to be the next Apple or Google. Although exactly what they are going to be doing that will ever result in a profit is anything but clear. Oh, it is very clear. I know you're going to end up back in Ripple. Look at what Ripple's doing. Look at what Ethereum's doing. Look at what Monero. Look at what Green's about to do, disrupting of the electricity industry. The larger financial firms have shied away from Bitcoin, with JP Morgan Chase's Jamie Dimon calling Bitcoin a fraud. Wait, what? Hold up. When was this article come out? November 20th, 2018. Now this guy is hopefully ill-informed. He's going to bring up Jamie Dimon calling it a fraud. He called it a fraud in 2017, and then 2 days later bought up the most Bitcoin ETFs in the world, millions, and was sued for fraud and market manipulation and found guilty of it. Just this year, JP Morgan has partnered with IBM. They have more than 20 patents out there on blockchain technology. They're partnering with Australia to bring the whole blockchain and crypto space to the entire Australian government. Read the news, clown. You're going to go back to something he said in 2017 when he's been proven false? See, again, this is where education is important. The average person reading this doesn't know that Jamie Dimon is neck deep in crypto right now. He called it a fraud. But this hasn't stopped lesser firms from attempting to generate fees by attracting investors who largely don't have the first inkling of what they are investing in. That part's true. But succumb to predictions of instant riches. That part's also true. Far from being folks wealthy enough to burn wads of cash off the bridge, these investors are much smaller investors who are being told, among other things, to use their retirement funds for cryptocurrency investing. Who's telling them to do that? I've been doing crypto talks for over a year. Have I ever said, sell your house, sell your car, put all your savings into crypto, use your retirement funds for crypto? Have I ever said anything like that? No educated crypto person does. In fact, what is my rule number 2? Never invest money you cannot afford to lose. He's making crap up right now. There are also predictions about investment performance that make little sense. Okay, how does it make little sense? Take FundStrat's Tom Lee, who just a month ago predicted that Bitcoin would hit 25,000 by the first of the year. So, what's wrong with that? Last year, Bitcoin went from $5,000 to $19,500 in 5 weeks. Anything's possible. After the most recent price drop, Lee cut his prediction to 15,000. Okay, so, which means that Bitcoin would have to go up by 300% in the next 40 days. It has before. I don't think it will this time, but it has before. One has to wonder what sort of data pundits like Lee rely upon to make such predictions. How about the numbers? How about history? In his defense, Lee is not alone. If you want a good chuckle, I'm getting a good chuckle listening to you right now. But if you want a good chuckle, check out these crazy predictions for a year in 2018. Without identifying anybody in particular, suffice it to say that a goodly number of Bitcoin prognosticators are simply shilling and attempting to pump the price of Bitcoin up because they themselves are invested in cryptocurrency companies. Wrong. The opposite is happening, you fool. The people who be, the powers who be, are manipulating the market down. They're not pumping it up. Have you been paying attention all year? So he says, this is where the scam comes in. Very simply, cryptocurrency investors are being actively misled. Jamie Dimon's fraud into investing in something that doesn't have a realistic chance of yielding the promised results. In the old days of securities regulation, this was known as selling blue sky and resulted in state securities laws of the same name, which is all to say that securities regulators, both at the federal and state level, have let the public down by not more actively regulating cryptocurrency investment. Oh, really? They let the public down? Did they let the public down when the stock market dropped this week as well? Setting suitability guidelines for financial firms and prosecuting the worst offenders, including those pundits who are nakedly shilling Bitcoin and related investments. And there's a reason why I'm saying everything like this, because of articles like this. I'm going to be getting hit up all day by people who are not in the space, who can't wait for something negative, and they're going to throw it at me. All I'm going to do is send them this recording. I am not spending time massaging somebody's ego. They got to listen to this recording. I break it down. At the end of the day, Bitcoin has become nothing more than a giant pump and dump scheme. False. And investors should be protected from the scheme, just as they would be from such a penny stock biotech company whose sole existence is a website plus a closet with a phone in Salt Lake City and the promise of someday obtaining valuable patents. If we went by this clown's logic, the internet should be dead right now. As usual, the horse is already out of the barn, but this doesn't mean that investors do not deserve at least minimal protection from cryptocurrency, even as interest wanes in this alleged asset class. Oh man. Yeah, this was a good laugh for me. But it goes to show, this is in Forbes. The vast majority of people are looking at it. You know what? I'm actually not too upset because he's actually going to solve a problem for me. He's going to scare a bunch of people from not getting into space. Thus, that will help keep the price of Bitcoin down. Well, wait, what? Brandon, what are you talking about? You want the price of Bitcoin to remain down? Yes. As low as possible. For as long as possible. Why would you say something like that? Don't you want Bitcoin to go through the moon? It will. I just need more time so I can do what the billionaires are doing right now and hoard up my crypto portfolio. I need more time. I want it as cheap as possible. Now, let's also look at common sense. There's 17 million coins in existence right now, 21 million ever that will be. There are more Bitcoin wallets open than there are Bitcoin, which means every single wallet cannot hold one full Bitcoin. There are 36 million millionaires and billionaires around the world today, which means if every one of them want to own at least one Bitcoin, there's not enough to go around. Classic supply and demand. That's it. That's the only, that's 2 + 2 = 4. That's all you need to know. The heavy hitters are not fazed by the current price of Bitcoin. They could care less. They don't worry about what the current price. I don't buy Bitcoin. I earn Bitcoin. I don't care what the price of Bitcoin is right now. I get nervous when it starts going high because I'm like, dang, I need more money so I can get more Bitcoin in the system. So keeping it low, I can stack up, get 50 or 100 Bitcoin and sit on it for the next couple of years. Oh, and those of you that are still skittish, let's look at one more thing. Look at this timetable. From 2014 to 2016, it was flat. You think we're worried about what's happened in 2018? Nah, you got to pull that microscope back a bit. This is long term. This is not get rich quick. Long term. All right, I almost lost my voice on that one. That one got me a little heated a bit. So that is it for early morning crypto talk. I will be back later today, depending on the news. If anything major happens, so I'll do late night crypto talk tonight. That'll probably be about 9 p.m. Eastern time. There will be nothing happening tomorrow. For Thanksgiving, I'm taking tomorrow off. But I probably will be back Friday because I do want to stay on this news. I want to see this little bit of recovery that's taking place right now. See how long this lasts. And if it's the new support level can hold or not. So I'm curious on that. So I will be watching the markets lately. I hope you learned something new. As always, that is the point. Hit the like button if you learned something new. With that, enjoy the rest of your day. The clock is ticking. For those of us that's in KGX, things are going to start moving, excuse me, very, very quickly as we run up to January. January and going forward, it is going to be explosive. People's lives are going to change in 2019. So you're either going to be a part of this or you're going to watch it and you're going to be like this clown and wait for the market to have a dip to want to come out and start writing something negative. I told you so. I told you so. Anyways, you guys have a great day. Oh, yeah, I will do another Facebook Live later with the camera on because I want to talk about things that really excite me in this space is the technological advancements that the blockchain is bringing to the world. I'm going to highlight that a bit. So with that, you guys have a great day. Bitcoin Brandon out. God bless. Bye-bye. Oh, and that will be a Facebook Live, not a YouTube or anything like that.